Welcome to your daily 5-minute crypto brief with Satoshi and Nova. Today is August 16th, 2025. I am Nova.
I am Satoshi.
Around $124,500 yesterday. That set the stage for, well, quite the roller coaster.
It really did.
And our goal today is to sort of unpack what happened. We've got market volatility, surprising U.S. economic news, some key policy signals, and pretty huge institutional moves all tangled together.
Yeah, a lot to cover. We need to talk about that U.S. inflation shock that seemed to trigger BTC's drop, right? Down about 4% to $118,000 before it kind of stabilized.
Mm-hmm.
And then Treasury Secretary Scott Bessent's comments. First one thing, then another. Intriguing stuff. Plus those record Ethereum inflows. What's really going on with institutional money?
Exactly. Where is it really flowing?
Okay, let's break down the market first. So Bitcoin spikes, then drops fast, recovers a bit. Ether dipped too, right? To up $4,435 after hitting a yearly high above $4,600.
That's right. Still a strong move leading up to that dip, though.
Definitely. And the alts were a mixed bag. BNB, Solana up slightly, XRP a bit more, Dogecoin too. Even Pepe and Shiba Inu saw small gains. But stablecoins, USDT, USDC, they held firm near $1.
Yeah, that points to a flight to safety, People moving to stability amidst the chop.
So how much of this tremor was internal crypto stuff versus, the bigger economic picture?
Well, that flight to safety you mentioned, it ties directly into the macro news. The U.S. inflation data, specifically the July producer prices, the PPI, that came in hotter than expected.
Hotter how?
Up 0.9% month over month and 3.3% year over year. That annual pace. Fastest since early 2025. It basically poured cold water on hopes for quick Fed rate cuts.
Okay. So less cheap money coming soon.
Pretty much. The Reuters poll shifted expectations to maybe just 1 or 2 cuts total in 2025 now. And that kind of risk-off feeling, it hits stocks, it hits crypto, it makes sense.
Right. And while everyone's processing that, Washington adds another layer. Secretary Bessent on Fox Business initially says no new government Bitcoin buys for the Strategic Reserve.
Yeah, that was the first headline.
But then, hours later, he's on social media clarifying, saying the Treasury is still open to getting more BTC through budget-neutral pathways, like using seized crypto.
Mm-hmm. Which, they already do. The U.S. has about $20 billion in Bitcoin from seized assets already.
So what is this back-and-forth signal? Just confusion or something deeper?
I think it highlights this ongoing policy ambiguity. There's interest, clearly, in crypto's potential, but they're being really careful not to signal, like, a big buying spree. It's about affirming long-term interest without making sudden moves. It keeps investors guessing a bit, shapes sentiment.
Okay, let's shift to the institutional side then. Those Ethereum ETF inflows were just huge.
Astonishing, really. Over $3 billion net inflows in early August. More than $1 billion in one day.
And outpacing Bitcoin ETFs during that time. That coincided with ETH hitting its yearly high, too, around $4,780. What's driving that level of interest in Ethereum right now?
It's really significant. It suggests institutions are looking beyond just Bitcoin as digital gold. They're seeing Ethereum's ongoing tech upgrades, proof of stake, for example, and its booming use in decentralized finance.
So practical utility is drawing them in.
Exactly. It feels like a maturing thesis. They're embracing Ethereum as this dynamic platform, maybe more so than Bitcoin at this specific moment, for new money.
We also had that massive options expiry, didn't we? August 15th on Deribit. Like $6.1 billion in Bitcoin and Ethereum contracts.
Yeah, that was a big one. Could have caused waves.
But it didn't.
It passed surprisingly smoothly. The reason seems to be a pretty balanced put-call ratio. Basically, the bets on prices going down were roughly equal to bets on prices going up, so they canceled each other out, more or less.
Interesting. So no fireworks this time.
No, but it's a good reminder of how big the derivatives market is getting and, its potential to inject volatility down the line.
So pulling this all together, what's the main takeaway for you as someone trying to make sense of this market? We seem to be at a real crossroads.
We really are. You've got strong fundamentals. Bitcoin's still up massively year to date, like 32%, Ethereum even more, over 45%. But then you have these growing macro risks, like that sticky inflation.
So caution is advised.
Definitely. Prudent investing matters more than ever. Keep an eye on the upcoming U.S. CPI data, the Fed meetings in September. For you personally, maybe think about scaling into positions, using stop losses. Risk management is crucial here.
It feels like the market weathered a mini-storm these past 24 hours. Showed some resilience despite the macroeconomic hits and all the technical events.
It did. And it really highlights this tension, this balance between crypto's own bullish drivers and these external economic pressures. What happens next really depends on how that interplay unfolds.
So here's something to think about as you watch the markets. Will the next big moves come from inside crypto, like more institutional adoption, new tech breakthroughs, or will they be dictated more by those global economic shifts and what the central banks decide to do? Stay safe, stay informed, and we'll be back to track it all.